John here with Dad's Options. Today we're going to talk about how to put on a completely risk-free butterfly trade. We're going to use the QQQs for this example, and I'll show you a real-life trade that I just put on, and now I have on with no risk and only upside potential. So let's get right into it. Okay, diving into the QQQ free butterfly trade. Free butterfly trade doesn't start off as a free butterfly. If you can find a trade that starts off free, I'm still searching for it. Please leave a comment in the comment section and help me out, because I'd love to find free trades. Now you can convert a butterfly into a free butterfly, and I'm going to show you how right here. So here's our free butterfly currently, 305, 310, 315. Again, it didn't start off as a free butterfly. So go into our activity tab here. You can see QQQ on the 4th. I put on a 36-cent credit butterfly. I'm long the 305, the 310, or long the 305, short 2 of the 310s, and long the 320 call. Again, I could do all that for 36-cent credit. Here's the risk profile. I'm looking at the trade tab. Anything below 315.50-ish, gonna stand to make money. QQQ had a big sell-off, so I think currently QQQ's down at like 279 currently, and that is one of the reasons why we were able to take off all the risk on this trade. So again, this is the regular butterfly setup. All of our risk is above 315.50, and it is defined above that. So we have about $464 here of risk to the upside. And again, this is, very standard call side broken wing butterfly setup here. Now, what you want to happen if you are looking to take off all the risk on this trade is you want a big move away from your butterfly. So if we have a call side butterfly setup, we want a big move in the downside direction away from our call butterfly. So, the market the past couple days has sold off really nicely. And so we were able to do that. So going back to the activity tab, you see here on the 8th, I was able to roll down the 320 call to the 315 call for a 30-cent debit. Now that is less than the 36-cent credit that we initially took in, and I'll show you on the trade tab how that actually takes off all the risk. So if we go back to the trade tab, and I'll just flip-flop these real quick, highlight these to show you what we actually have on. This is our new risk profile. Again, we took in more credit than we paid out to roll the 320 call. And if I just get rid of this, you can see the 320 call, we were able to roll it down to the 315 call, essentially eliminating all the risk. Now, if you're still a little confused by that, let me show you why that eliminated all the risk. Initially, we had the 305, 310. We had one long call spread. So you can see that here. We have one. We're long the 305 call and short 2 of the 310 calls. But we'll just use one of those calls, one of those short calls, just to have a basic 305, 310 long call spread. Now, prior to us rolling down this long call, we were short one 310, 320 call spread. We were short one 310, 320 call spread, and that's a $10 wide call spread. So you could see that if we're long one $5 call spread here and short one $10 wide call spread, we would have $5 minus whatever credit we received of risk on. We had, I believe it was $464. So when you're able to roll this 320 call down to 315 for less than that credit, now you have a short 310, 315 call spread. Those are the same width here, 305, 310, 310, 315. If you have a net credit after all that said and done, you stand to make whatever that credit is. You know, if it's anything below 305 or anything above 315, you're going to just make that credit, which in our case, it's $6. Yay, we cover our commissions. But look at this profit potential here. Our profit potential, basically, we will make what our ideal situation, we want the 305, 310 long call spread to be at max profit come expiration, which that is in 38 days. We want the 305, 310 to be at max profit, and we want this 310, 315 short call spread to expire worthless. So, you know, what's the likelihood that the 310 strike is going to be pinned exactly? You know, that's not very high, but you know, we've created a $10 wide profit area here that, you know, is it realistic to expect that we land somewhere in there? The probability is still low, but again, we don't have any risk. So this is my, preferred way of, you hear the term playing a lotto. This is how I like to put a couple of these non-risk trades on if I can. And then, you know what? I forget about them. They're in my portfolio. I will check on them every so often. And, and you do that by just, monitoring your P&L. And every so often, one of these hits and you make a nice little chunk of change here. Again, you start off, we could put this back on, go back here. You can do a similar order, and this is just how I'm just doing the analysis. When you put on this butterfly trade, go back and do the opposite. When we initially put on this butterfly trade, this is a really high probability profit trade. Look, 86% pop, and 98% of P50, which the P50 is on this max credit of 36 cents. So that's a little skewed, but it's a high probability trade. And we could have just let this trade just roll and not taken off all the risk. But again, I like to take off the risk on some of these. That's what I was looking to do in this Tesla position that's in the portfolio. Tesla, the opposite happened. And this is a put side broken wing butterfly. So what I really wanted to happen was for Tesla to have a big rally. And I put this on, I don't even remember now, but it's over a week ago. And Tesla immediately sold off to the downside and just ripped right through our put side broken wing butterfly. So we're going to be at max loss on that unless Tesla has a couple more of these $20 days. So, but yeah, so that's what I look to do on probably, I would say, about half of my broken wing butterflies, especially when the credit is as small as it is in QQQ when we took in $36. Again, I like to take the risk off and look for that to, fall somewhere within my range at expiration. Again, here's the profile of a what your position looks like after you take off all the risk. So truly free trade at this point. I have no risk on. You can let this one run all the way up to expiration. 38 days, there's a lot can happen. QQQs are down here at 279. So, it's going to take a little bit of room, a little bit of a run here to get up somewhere where we could be at max profit zone. But that's a free butterfly. Hope you enjoyed it. If you have any comments, anything I missed here, please leave them in the comments. Hopefully other people read those and we can all become better traders and learn from that. If you like this video, please give it a thumbs up. Hit that like button, subscribe to the channel, really helps support me. I appreciate you guys, and plenty more videos to come. Thanks.
Happy trading.